as the Fiat, the BRICS nations are getting stronger, and, a conversation you and I had in El Salvador, you were telling me how China and Russia are the two top purchasers of gold over the last 20 years. And everyone's getting off of the dollar. And obviously in the long run, that's got to bode well for Bitcoin, but it could pose a short-term collapse that would bring the Bitcoin price down. Kind of like when COVID hit and the Bitcoin price dropped to whatever, under 4,000, but then within a year it was up towards 50 or 60,000. How do you see with BRICS and all of this stuff, this global finance and the nation states going away and everybody getting off the dollar? How do you see that playing out in the next 12 to 24 months?
In dollar terms, the price of Bitcoin would go higher, right? If the dollar is going down, your dollar price in Bitcoin goes up. So we're very happy to see the dollar go down. Bitcoin is already making new all-time highs in currencies that are undergoing hyperinflation, as we see in Argentina and Venezuela and Turkey. In these places, Bitcoin is already hitting new all-time highs because their local currencies are collapsing. The dollar is it's the cleanest shirt at the laundry, right? It's a fiat money, but it's on a relative to these other fiat monies, it's the less worst option. But eventually it too will go this way of all fiat money. So fiat money is, we're at the end game for fiat money, which was like a 300-year experiment. And then in 1971, of course, we went on an all fiat money for the world when Nixon closed the gold window here in the United States. So this is all winding down. We're moving toward a post fiat money, post central bank, post nation state world, and gold will have a place in that world. And countries like we said, China, Russia, and others are aggressively buying gold. Central banks still settle in gold, and gold will still be around, and it'll still have a bid, and people will still buy it, and it'll still be a safe haven play. But as Paul Tudor Jones has said, all the dynamics that go in, the macroeconomic dynamics that go into analyzing and projecting where the prices of these things are going, he likes inflation hedges. He says, yeah, gold, of course, is a classic inflation hedge, but Bitcoin is the fastest horse in the race. And, I'm looking at the numbers here myself, and I'm figuring for every dollar move in gold up, you're going to get $30 to $40 in Bitcoin. So, it's a supercharged way to play the collapse of the fiat money world, which includes the dollar. The dollar is really in jeopardy. The country, the United States, is printing money just to pay the interest on the debt, just the interest, right? So that's debt monetization and a debt spiral. And the GDP is not going to suddenly go up 50x to create enough tax revenue to pay down that debt. That in fact, the GDP is shrinking. The amount of the dynamics are horrible. For the fundamentals of the US dollar are terrible. And everyone who's got a portfolio, and there's about $100 trillion under management by portfolio managers around the world. And that game is basically asset allocation. You're allocating your portfolio to avoid risk and get the biggest return you can. And the dollar is being downsized. People are moving out of the dollar. They're moving into Bitcoin. Bitcoin is now considered to be a safe haven. It's considered to be a risk-off investment, which is incredible because when we started back in 2011, when it was $1, it was considered to be the most speculative play in history, right? And now it's considered to be the safest asset in the world, safer than bonds. It's less volatile than bonds than in 2023, safer than the property market. Property market's collapsing. Look at all these commercial real estate deals every day. Washington, D.C., all these, New York City, these huge office buildings that were bought for $300 million are going on sale for $30 million. It's like the biggest markdown in commercial real estate. It's unbelievable. And of course, that commercial real estate is the collateral that holds together all the banks that make all those loans. That's their primary business, is making real estate loans. So that means the balance sheet of all the major banks are severely impaired, which means they're going to have to get a massive bailout, which means going further into debt, which means interest rates are going to go even higher, which means the dollar is going to be continuously under attack. And nobody wants the dollar. Nobody wants the U.S. Treasury bonds. And into this mix is Bitcoin as a safe haven play. It separates money from state. It's unconfiscatable. It's cheap relative to gold, way cheap relative to gold, and it's cheap relative to the bond market. The global bond market is it's still incredibly cheap relative to what you could call the total addressable market, TAM. Total addressable market for Bitcoin is 400 trillion, because that's the total size of the pot of financialized assets on planet Earth. And it's everything on planet Earth that's traded is heading towards zero against Bitcoin, because Bitcoin becomes the global reserve standard.